Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's check what happened overnight. Mixed across global markets. European stocks did hold on to early gains. US stocks, though, mostly lower as the Treasury yields rose after market expectations for an interest rate cut by the Federal Reserve was shaken by a stronger than expected producer price index. However, the S&P 500 did manage to finish at another record closing high. Among the Mag 7 stocks, mostly higher, aside from Apple, which slipped, and Foxconn forecast a significant rise in third quarter revenue as the world's largest iPhone maker said it had for the first time made more money from its AI server business than from smart electronics last quarter. The company is Nvidia's biggest server maker and Apple's top iPhone assembler. Intel shares, they rose strongly on news that the Trump administration is in talks with the chip maker to have the US government potentially take a stake in the company. Cisco Systems fell after the network equipment manufacturer broadly inline forecast did little to encourage investors there. Deere fell heavily after the farm equipment maker reported a lower quarterly profit and tightened its annual profit forecast. Tapestry shares, they plunged after the Coach handbag maker forecast annual profit below estimates. And shares of the copper miners fell, including those US listed shares of BHP and Rio following the price of the red metal lower. Well, US producer prices increased by the most in 3 years in July, rising 0.9% amid a surge in the cost of goods and services, suggesting a broad pickup in inflation was imminent. A 1.1% increase in the cost of services accounted for more than 3/4 of the broad-based increases in the PPI. While on the goods side, beef prices jumped 4.5%, eggs were up more than 7%. On the geopolitical front, President Trump has said he believes his Russian counterpart, Vladimir Putin, is ready to end his war in Ukraine, saying, I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they get along. Leaders are due to meet face-to-face tonight in Alaska with expectations that at least a second meeting involving Ukraine's leader will be required to broker peace. US Treasury yields rose on the higher than forecast producer prices, which lessen the likelihood that interest rates will be cut in September. The yield on the 2-year note rising to 3.74%, the 10-year at 4.29. The US dollar was stronger, and the Aussie is back to 65 US cents. And Bitcoin also falling from its recent record high, trading at around 118,000 US dollars. Oil prices, they've surged to a one-week high after President Trump warned of severe consequences if his talks with Russian President Vladimir Putin fail. Brent crude futures up close to 2% at $66 a barrel. Copper is weaker, iron ore falling close to 1.5% to $101 US dollars a tonne, and the gold price fell as the dollar and Treasury yields rose. John Blank joining us from Zacks Investment Research. John, do we have you there?
Yeah, Andrew, can you hear me?
Terrific. Yes, we've had some technical issues, but we seem to have solved them. All right, let's get to that latest data then in terms of inflation. So producer prices, higher than expected. What does that do for the case for a rate cut next month?
Andrew, what we have from the PPI is a 3.3% year-on-year annualized number in July. And Goldman Sachs chief economist, who does the modeling work, has a 3.2% CPI for the end of the year. So what the PPI is basically confirming in a kind of a pipeline sense is that we are headed from 2.7 back up to 3.2% on the CPI by the end of the year from the tariff effect. So the problem with trying to divine from that what the Federal Reserve System will likely do is the Federal Reserve System has a dual mandate. And right now, the employment mandate is looking increasingly weak, which means they will probably cut in September. But the converse of that is they are still well above their statutory mandate for 2% expected CPI or corporate PCE. So it depends on how the FOMC votes. But I am thinking, basically there's going to be more pressure for addressing the employment mandate in September. That's what the futures say. But, in general, Andrew, I also think we've got an entire month. The next meeting is the 16th and 17th of September. So that's going to be, post another CPI print, post another PPI print, post another jobs print. So I think, in general, we all got to sit back and remember we have an entire month before we get real live data for the FOMC.
John, you mentioned pressure on the board. Is that purely coming from that economic data, or is it political pressure? We know that is there, particularly from the president and also from Scott Besson as well.
Yeah, that's it. I mean, the good news is Scott Bessent is, a articulate voice from Wall Street, and he has been successful in pushing the president to stay with Powell until May of next year when his term, gets finished. Let's hope that happens. Let's hope for that type of pressure to overwhelm the impatience the president has with the Federal Reserve's deliberate statutory mandate. I think in general, this president just doesn't understand that, this is a legal mandate, and all of the FOMC, not just Jerome Powell, is going to adhere to it. And so if he appoints someone else and, for whatever reason, Powell resigns, it still doesn't mean there's not going to be a divisive board and a divisive vote. And frankly, that will not be helpful, whatever objective he seeks to have. So we can only hope, Andrew, that there is a strengthening of the Treasury Secretary at the administrative level, and we see it through with Jerome Powell till next May.
John, meanwhile, we see equity markets continue to move higher and higher, record after record. Is that justified? What are you seeing with those valuations at the moment?
Andrew, I don't personally think it's justified. I mean, what we have here is a setup that was technically favorable for a momentum trade out of that 20% fall and back on that Liberation Day. So basically, once the momentum traders got behind this market and had a number of momentum stocks with the market weight S&P and the Nasdaq 100 drive it up, it's been unstoppable because the machines are not stopping it. So I personally think it's just driving a bigger and bigger wedge between the screen-based momentum trading stock environment and the Bitcoin environment that's supercharging it behind that. That's kind of the undertext of it all. With an economy up here is frankly flat on its back, static at best, and probably headed into a 30, 40, 50% chance of a recession within a few months. So at some point, the wider the wedge gets, Andrew, the more dramatic the correction will be. And that's the problem here is all the smart money that thinks, momentum trading is always going to work and they're going to out in time is going to find out, the doors are going to be pretty small once everybody starts to run through it.
John, you always bring a couple of stock suggestions to us. Let's get to them just quickly, if we will. The first one being GE Healthcare Technology. So you got a strong buy on this. Why is that?
Yeah, Andrew, this is a great stock to know about. It's January 2023 is when it IPOs. We don't have a lot of history in that stock. You can see right now, if you look at our chart, the 2026 and 2027 numbers are up at the $85 share price as fair value, and you can pick this stock up at $70 a share. So in a rare situation like this, where we have a range that can be expanded $15 a share when an overheated market, this is actually a stock I like right now.
All right. The second one you're looking at is the cruise line operator, Carnival. What are we seeing there, I guess, particularly in terms of that consumer demand?
Well, that's it, Andrew. I mean, you hit the nail on the head. Discretionary spending at the level of a Carnival cruise line is very attractive. You can see a stock chart here coming off the lows in the $8 share, just after COVID, back up to the highs at 30. And look at that nice, stable pattern to their growth from 24, 25, 26, 27. This is what you want to find as a retail investor on a long holding pattern, is the company's doing stable and steady growth, and then you just ride this up. The only thing I would point out here, Andrew, is you can look at the 18 to the 30 move from the Liberation Day lows, and that's the thing that you just look at this and you say to yourself, how much further can this go? So in this sense, I think Carnival's ready for a pullback, unlike GE Aerospace, and I would not be a buyer of the stock right now.
All right, okay. And thirdly, Comfort Systems. I haven't come across this before, but this is what air conditioning essentially.
Yeah, Andrew, this is a chart that we need to talk about. This company makes air conditioning systems, industrial company. So in 2023, you could have bought this stock for $100 a share. In middle of 2025, August 2025, $700 a share for an industrial stock. Yes, it does make $20 a share in earnings here, but you got to ask yourself, where does a stock move from $300 a share 4 months ago to $700 a share, and you want to get in on a stock like this? This is classic momentum trading. This is classic what I was talking about at the index level. Now you see what I'm looking at. I mean, you can see it's basically fair value with our earnings. So it's not it's not like it's run too far, but it's definitely pricing in all the good news, any bad news. And of course, we have an 18% global tariff coming from the United States that got imposed on August the 7th. And then we still have the news to kick the can with the Chinese till October. This is not a stock I would want to be in. I would be a seller of FIX for sure. And this is exactly what we need to worry about is this stock can go from 700 back to 300 just like that. And the door will be very small when a lot of people try to get through it on a stock like this.
Great example of that momentum trade. John, thanks so much for joining us from Zacks Investment Research.
You bet, Eder.
Let's take a look at where we're likely to open on this Friday. Marginally positive there, up close to 0.1% according to SPY Futures. Stay with us because we're about to get into the open in just a minute.